Morning, everybody. It's somewhat exciting and a little bit daunting with this new format, to be the first presenter. With so many exciting things going on, World Cup, SpaceX, and lots of exciting speakers following me. But, nobody wants finance to be too exciting, so I shall try and keep it calm. I'd also like to say thank you to my wonderful finance team, some of whom are here today, because they're very supportive to all of you as members and to me and colleagues. I am going to update you on three areas. The annual report and accounts has recently been published on the website, available. I'm sure you've all read it already. So I'll go through a few points on that, and then some of the other finance activities that we've been involved in, and also a little bit of an update on our current position. So, as I say, the annual report is available on the website, and it has lots of information on the business, on the operations. It's a really good read, by the way, if you have a chance. There's a bit on finance, and I will be covering that. There's also, we publish a slightly more detailed report, a statutory report, which is filed and will be filed shortly with the Companies House. And again, you can get lots more information on that. But why am I so happy and relaxed? Apart from having wonderful colleagues, there are three financial reasons, because we're in a very strong financial position. We've had an excellent progress in 2025. We've continued to invest in the business, but essentially we have very high recurring revenue, 97%, positive operating cash flow, and excellent reserves. So I'll just go through a little bit more on revenue, operating costs, and net result, CapEx, and cash flow. So, we always plan to grow the business, but the most important thing is growing the value to members. So we increased the connected capacity by 18% last year. There was a continued migration to higher speeds like 400G, but we were a little bit below what we'd forecast on the revenue growth. So we were 5% below what we expected to be, but there were some good reasons for some of that. Nevertheless, the revenue grew to 22.7 million, which is 4% growth year on year. Core peering overall did reduce by 1%, and some of that is explained by the switch to higher speed. So, in fact, peering for 100G plus 400G was up 2%, and so that's strategically what we want to do. The other thing I would say is that the benefit, because obviously we had some price cuts and price adjustments and reduced port access fees, the average benefit per capacity was about 12%. So again, we're trying to deliver value. Just under 50% of our revenue is from non-peering, and again, as part of our 3-year strategy is to try and diversify our revenue streams. And we had a similar 72% gross margin, so we're happy with that. On the operating costs, they were planned to increase over the previous year, but we did in fact stay below budget, partly because we could see the revenue was going to be lower. Some areas, obviously the inflation affects all businesses. Some areas had much higher inflation, I would say, particularly things like regulatory compliance, things we can't really avoid. So some of that increased our costs, and we're also spending on automation. Nevertheless, the target, the group deficit at 0.3 million was close to our target of sort of break even. And CapEx is always important, so we continue to invest in growing the business or replacing things if they're end of life. The tech team are always reviewing priorities on that to make sure we get the best value. And so we spent 3 million last year, which was higher than the year before, even though it was a little bit below what we'd originally budgeted. Some of the things I've put up there, which we spent money on, like Lawn 2 refresh and Manchester upgrade. And a lot of what we do also is making sure, with our sort of look to ESG, that we're improving the power efficiency capacity, if you like, of what we add. So I can see some of you a bit flagging. Maybe the first coffee hasn't hit you. So perhaps a bit of audience participation. What are the 3 key words that no CFO presentation is complete without? 3 key words. Anyone?
Profit.
That's one word. Yay, Lisa, thank you. Cash is king. So we had a very good positive operating cash flow, 2.3 million, which was higher than the previous year. And by generating operating cash, it allows you to invest in the business and CapEx and so forth. And our funds were managed in line with our new treasury policy. I won't go through all the numbers here. Suffice to say, the P&L and the balance sheet are available in the summary annual report. We had a similar result to last year with a small net deficit, which is roughly 1% of revenue. And on the balance sheet, I would just say still a very strong balance sheet, so that's good. So that's the annual report. Again, I'm sure I've whetted your appetite and you're all going to go and read the detail if you haven't done already. So what else has the finance team been doing? Last year I told you about we had new auditors, RSM, and so this was their second year, and very pleased. It was a very efficient audit, all went well. And for those of you that are members, there's an AGM resolution today following the board recommendation that we reappoint RSM. The other thing I told you last year about the new treasury policy, and this was our first full year of operating that, and it seemed to go very well. It's all about managing the financial and treasury risks and making sure we've got enough money because, as you know, we can't raise money, so we have to manage within our resources. Did a lot of other things in terms of complications of overseas operations with banking, foreign exchange management, and tax. And the other thing I would say is we've done further automation on managing our fixed assets, which, our capital expenditure, improving the controls over our capital. And again, for those of you who read the statutory report and the details in one of the notes at the back, you will see that we did a bit of a tidy up of the balance sheet where we took out old assets that had no net book value off the balance sheet. And if there's any technical questions on that, I'll take that later. So, final bit from me, update on progress in 2026. So all I would say is we've had a moderate revenue growth in the first few months, and it's a little bit below what we're planning. But again, our focus, and you'll hear more on this later from other people, is about value and how we bring that to the members. Cash and deposits remain king, so we're in line or a little ahead of budget on that. And I will give a further update in November on how we're going for 2026. The only other thing I would mention, again, for those of you that are interested in accounting standards, in 2026 we will be subject to some changes in accounting standards. And again, I'll take some questions on that if anyone's interested. So there you are. Hope you stayed awake for that, and thanks very much.